Silver price looking desperate. Central bankers, inflation killing cuts. Silver has shown great gains recently, but what will it take to move it up to $30 an ounce? In this video, I'll break this down for you. Today we have news that gives silver the push it needs to keep moving up. To understand this, here's an article on Yahoo Finance that says IMF calls for fiscal restraint in year with most elections ever. Now, we here in the US, of course, we're all looking at our presidential election this year. This article states the International Monetary Fund urged countries on Wednesday to rein in fiscal spending and rebuild their buffers, but said that could prove difficult in the world's biggest ever election year. A record 88 countries, home to more than half of the world's population, half of this globe, half of the world's population have held or are holding national elections in this year, 2024. And the IMF is noting that governments tend to spend more and tax less during election years. Now, this directly impacts silver, as we all, especially us here in this silver stacking community, right? We're all following this enormous national debt, this federal debt that is just growing and growing. So we're not alone in this. And as that debt, as our debt-based society is based upon that massive debt, we see that fiat currency is weaker and weaker as every decade passes, and we move into precious metals. That demand results in, of course, a push up for silver, but that's not what really is going to get silver this hit. I'm going to get to that in a second. This article says the United States will hold its presidential election in November, while voters in India will begin voting later this month. Taiwan, Portugal, Russia, Turkey, they all have elections this year. The IMF said budget overruns were often likely in election years, a risk amplified by increased demand for social spending. It said deficits in election years tend to exceed forecasts by 0.4 percentage points of their GDP compared to non-election years. Slowing growth prospects and still high interest rates would further constrain fiscal space in most economies. This article says that the IMF said on Tuesday the global economy is set for another year of slow but steady growth, forecasting global real GDP growth of 3.2% for 2024 to 2025. Really the same rate as 2024. So it's barely a large margin. But it also says, listen to this data, global public debt, meanwhile, edged up to 93% of gross domestic product. 93% of GDP is public debt in 2023, about 9 percentage points above the pre-pandemic level. The debt increase was led by the U.S. It was led by China, where debt rose by more than 2 and 6 percentage points respectively. So we cannot expect that debt that we're seeing grow and grow change much this year, as half, it's not just us, it's not just the U.S., half of the population of this planet are experiencing the same situation. There are elections going on in all of these major countries, and that is the go-to, is to, of course, make certain people happy by cutting taxes, so your government is not bringing in enough money, and meanwhile, everything is being run on debt. Now, silver is really looking at the Fed and cuts that we thought were going to come to the U.S. This article on Reuters says UK inflation slows its fall, pushing back rate cut bets. And what happens in the UK, we have to look at in the US. Every central bank, we're all tied together in this web. We're in a global economy, and everything is tied together. So we can't just put our blinders on and only look at what the US does, what the US central bank does, and wait for Powell and think that that's going to have a real impact. All of these, this is a global economy. Everything is tied together. What happens in the UK gets shaken down to us. So this article says Britain's inflation rate slowed by less than expected in March. That's sounding familiar, doesn't it? It slowed by less than expected in March, according to official figures published on Wednesday, adding to signs that a first interest rate cut by the Bank of England could be further off than previously thought. Again, this is similar to what we're going through here in the U.S. British consumer prices rose by an annual 3.2%, down from 3.4% in February, and its lowest in 2.5 years. But the BOE, which has an inflation target of 2%, and economists polled by Reuters had forecasted 3.1%. So that is very, very similar to what we're hearing here in the U.S. And of course, the response is to hold off on rates being cut. Now, silver is doing something remarkable these past weeks, as is gold. Even though our dollar is showing strength, and the sterling also over in Europe, the sterling is showing strength too, metals are continuing to show strength. So this could actually work in our favor as things continue in this light and inflation sticks. I mean, this is really the opposite of what we've seen historically for metals, for silver and gold. Typically, when there's strength in the dollar, of any dollar, we could be looking at currency in Europe, or we could be looking at currency here, anywhere. Typically, when there's strength in the currency and there's strength in treasuries, that's where people invest their money and they pull out of metals. But here we are seeing lately, in the past 2 weeks, we're seeing that metals are remaining high. Silver is remaining quite high. Now, it's been at about $28, and we're, of course, looking for the push to go up to $30 and break that $30 mark. And I see this data that is coming out from central bank, the British central bank in England, that this will support the trajectory that silver is on. Because just like we're seeing here in the U.S., rate cuts are being pushed back and pushed back. So people are going to continue. It's inertia. It's inertia. People are going to continue business as usual. They're going to stick with what they know, and they will continue to go in on metals like silver, especially when silver is really within reach. Now, gold, of course, is completely out of everyone's reach. But if we look at silver more as a ratio, as a silver to gold ratio, silver is the smarter buy anyway. It is shown more, it's outperformed gold already. Gold has shown an increase in these recent jumps of 15%, and silver has increased 20%. I mean, it's outperforming gold. So even though it's the cheaper metal, and everybody always looks toward gold, really, silver is the sleeper, right? That's a term that we use for an investment that is overlooked, and people don't think much about it, but it seriously is the metal that is outperforming gold, right? That is a nice increase, 20%. And it will still, as we see from this data coming out today, silver is going to continue. It's going to continue on the upswing. We had thought, if you had asked me last week, I saw a correction coming, and so did my local coin shop. He also saw the same thing. He saw a correction coming. But now we see silver and gold doing the opposite what we all expect, staying strong and really competing neck to neck with the dollar and with treasuries. It's mind-blowing. It is completely the opposite from what we've seen historically, and it tells me, as a silver stacker, I'm not a financial advisor. I'm just a regular guy stacking silver. It tells me to stay in and to keep picking up silver, especially as this ratio is going pretty well. I could see the silver. You want my crystal ball? I'll tell you what I see the future for silver. I see it to continue to rise and keep pace with gold. And I see that silver to gold ratio starting to go down. So when silver starts to drop, when that ratio goes closer to like 70-1, that's what we really want. And then you cash out your silver for gold. 50-1. I mean, it's gotten there in the past decades. It's gotten to 50-1. You just have to be watching and be ready to swap out your silver to gold. And then you're really doing things the way they should be done. If you appreciate this content, please hit like and hit subscribe. It really helps to keep this information out there and keep it going. It really means a lot to me. So this data coming out from England tells us that the trajectory for silver is going to keep going up. It's not stopping. It's on its way to $30. And really, as we see these rate cuts pushed back, not just in the U.S., but in Europe also, as those central banks decide to push off their rate cuts and silver and gold continue to perform as they are, I absolutely see $30 in our range, even low 30s, $31, $32 an ounce.